Hey guys, my name is Mike. I'm with Highlands Residential Mortgage. Today I am with one of my favorite realtors, Kiah Jones with Elite Realty Partners, and I'll let her introduce herself.
Hi guys, my name is Kiah Jones. Again, I'm with Elite Realty Partners. I am a full-service realtor and happy to be here with Mike.
Great, and today we're going to have, I guess, just pretty much like an open discussion. We're going to be more having a conversation. I'm going to let Kiah kind of talk about what she's kind of curious about, what her buyers are kind of curious about, so we can kind of go over that as well in our conversation that we're going to have.
Yeah, so working with buyers and with sellers in this ever-changing market really has piqued a lot of questions. Clients want to know, where do we stand? Is the market going to crash? Are there homes? What do they do? How do they land a deal in this market? So I think there's just a lot to unpack. Mm-hmm. And hopefully, if we can't get through all of it today, then, in pieces. But most importantly, give our viewers information and value.
Yeah, no, absolutely, 100%. And I think it's a great time to kind of do this video because you do see a lot of buyer hesitancy in the market right now when we have these conversations with people that they were pre-approved in the past, they're still pre-approved now, obviously, most likely for a little bit less because of the way that rates are going, and we're having these conversations every day, like, hey, they think that the world's falling apart because of everything that's happening, and they're listening to the negative stigma, but they're not listening to the people that are doing this day in and day out. So hopefully within this video we can kind of let you know this is the real deal, this is what's happening behind the noise. Okay,
yeah,
ready, fire away.
So you see this every day. Numbers don't lie. So what do our buyers have to look forward to in the next two quarters? Yeah,
so next 2 quarter outlook by the end of this year, right, what we're kind of looking at, I think that we're still going to see home price appreciation. The numbers literally just came out. I posted it today, and we spoke about this on Monday as well. CoreLogic thinks that we're going to see an increase of 5% year over year by the end of December. CoreLogic is basically a data collecting company, and we use a lot of that information that they collect on different things as well, and specifically one of them is home price appreciation. I think that number is actually low. I really do, because a lot of people still need a place to live. There's still a supply shortage. I think we're going to see home price appreciation at anywhere between 8 to 10% by the end of this year, year over year. And so what that means is that people are still buying homes, and they're buying homes at more than what the average or more than what the normal market is. A normal market home price appreciation is about 4 to 5% yearly. And so last year we saw 20% year over year home price appreciation. This year, where everybody seems to be a little bit nervous about what the future holds, people are still buying homes, and we're still seeing home price appreciation at anywhere between 8 to 9% most likely this year. And even at worst case 5%, where people think that that's terrible, that's average. That's literally what the history of the market kind of suggests. So I think we're going to be okay. I think the biggest thing is you need somewhere to live, right? And I think that's the conversation that you have with your clients as well.
Right. So my conversation is very much so geared towards, let's find what's going to be affordable, not what's affordable, what's trending right now, mm-hmm. Putting a lot of money above asking price and stuff like, what are you going to be able to afford 2 years from now, 3 years from now? Because as a realtor, the fear I have is calling 10 months out, and I'm hoping that you're going to say, hey, come have mm-hmm. a barbecue, and you're like, no, come sit at the table because we need to sell, and mm-hmm. that's not the position that we want to be in. So my conversation with my clients is truly like, let's know where you stand and what's going to be affordable for you in the event of any kind of changes. Inflation right now is a big thing. Families who purchased homes last year probably was not forecasting the type of inflation that we're currently seeing. Eggs are expensive, gas is expensive, just walking out of your house is expensive now. So just really giving them the tools in which to find a home that's going to be affordable for them, that they can truly stay in and not have to sell later on.
And I think you posed a good point about inflation, and this is what we kind of try to tell homebuyers, right? Is owning a home is the number one key to fighting inflation, because that's one bill that is not really going to change too much in the future. there are anomalies. Like we had a client specifically, right, where their stuff went up, their escrow went up, and they were able to fix it, but it was still too much for them. And ultimately they needed to sell, and you're going to have that because they were going through some specific stuff too. But for the most part, your mortgage is something that is going to be the same cost throughout throughout the 30-year period that you have it. Unlike eggs, unlike cars, unlike gas, that these things are out of your control and they're going to change, or they can change in environments like this.
Yeah, and to your point, what also changes is rent.
Mm-hmm.
Rent goes up, inflation goes up, rent goes up.
Mm-hmm.
And people are seeing that now. They're unable to even find something that's worth buying or worth renting at this point. That's not at the same price point as what they would be paying for a mortgage. So,
correct. Yeah.
So rent, all of that is a factor when it comes to really making a good and sound decision as to what you want to buy, where you want to be. And I think that having those conversations now is important. So I'm glad that we're doing this.
Yeah, absolutely. That's a good point. And I can't believe I totally missed it. We always say this, right? Renting is 100% interest rate. Doesn't matter what the interest rate is on your mortgage, because renting is always going to be 100%. And we're seeing right now that mortgage or that rental payment is increasing by the month. I think the numbers came out the other day about rents from May to June, and those increased another like 1%. And you're talking about just month by month in terms of what rents have increased so far. It's astronomical, especially in the South Florida area. They continue to kind of go up, and we even now you would think that we'd kind of be at the tail end of it. Because a lot of landlords have already raised their rents and stuff like that. But even now, we're having conversations with people that are trying to scramble to leave their home because, or the home that they're renting, because the landlord is already telling them that they're going to raise their rent. I forgot who I had a conversation with, but it was with one of my realtors as well, that they said that the person is looking to leave now because they were renting, and the person went from basically they raised the rent like $1,000. I don't know if it was from 2 to 3, from 3 to 4, but $1,000 is a big difference.
Yeah.
When you're talking about it, that's an extra $12,000 a year, so it's still happening.
Yeah, definitely. So let's get to what they really want to know.
Mm-hmm.
Is the market going to crash? And if so, when? And if not, why not?
The market's going to crash tomorrow. No, I'm just kidding. It's not.
Don't tell us that. He's lying.
No. The market is not going to crash. It's pretty much the easiest way I can put it is supply and demand, right? Like I mentioned, people need a place to live. There isn't a lot of people selling homes, right? So what happens is when you have an influx of people that, hey, I don't want to rent anymore, because the few rents that are out there, because renting is an issue as well too, right? Just before we even jump into that, finding a place to rent is very difficult right now, and that's going to include as well when you're looking at the buying side. There's just nowhere to live, and so that demand is going to continue to kind of eat at the amount of supply that we have. Right now, the amount of supply that we have for sale, homes for sale in general across the nation, is about a 2-month supply. A healthy market, for those of you who don't know, is 6 months. So we are well below what a healthy market looks like. And so because of that, people are still going to be continuing to buy. It's not the same thing as 2008, where you had an influx of supply and not enough demand. That's where you have the issue, because now you have these homes that are sitting on the market. Right now, builders are actually very hesitant, even though with the amount of demand that we have, to continue to still build, because they remember what happened back then. And so builder confidence is still really high. It's in the 60s, but you would assume with the amount of people that they would be getting into homes, it would be 70, 80 and stuff like that. So I don't think that we're going to see a crash for that reason. 2008 was completely different because of the amount of supply that we had. We don't have enough. Are we going to continue to see $50,000 over appraised value? No. I mean, my clients are getting under contract much easier, and you still have to come in with a little bit, 3, 5, depending on your purchase price point. I don't want to tell you that that's what it's going to be. If you're looking at a $500,000, $600,000, $700,000 house, maybe a little bit more, but roughly anywhere between $3,000 to $5,000 on is really normal right now for overappraised value. So people are still doing that. There's homes that are still competitive that you still have to be competitive on, but it's not as bad as it was before. But $3,000, $5,000 over appraised value, what are you doing? You're still pushing that envelope for that home price appreciation.
Absolutely. And I think another thing that we're also is contributing to why this is not going to crash, this market is not going to crash, is underwriting is extremely intense now. Before, if you had a pulse and you potentially had a job, you didn't even have to securely have a job, you just had to maybe have one. You could get a loan, an arm's loan, and then we know what that happened. They gave you these low interest rates, and then boom, they shot up. But that's not the case anymore. Underwriting it's crazy. I mean, they ask for things, and you want it to be that way so that the people who are getting in homes can afford them. And that's something I continue to tell my clients. People who are buying homes, they can afford them. So if your friend bought a home, they have the money to buy it.
Yes.
Don't second guess that.
Correct.
They can afford that house. So there's no insight for realtors, at least for myself and my group of friends and colleagues. We don't see an end in sight right now where it would just topple over. And it definitely is a good time to get in, especially like you said, appraisals right now, or asking over appraised value right now is much lower than what it was before. I had clients offering $40,000-$50,000 before, and now we're down that pipe to about $20,000 to $15,000.
But you're probably at a much higher price point at that point as well.
Absolutely.
That's the thing. And to your point with underwriting too, just think about if the market does crash, right? You as a first-time home buyer, right? If you're watching this video, you as a first-time home buyer, do you think that underwriting is going to be easier to get into now? It's going to be much, much harder than it already is. You most likely won't get approved. What happens when the market crashes is everything starts getting tighter, right? Because these mortgage companies essentially are losing a lot of money. Is what it is. So now they have to be very picky, choosy about the clients that are actually getting approved. Fannie Mae has to tighten up their guidelines. FHA has to tighten up their guidelines because of that crash. So you don't want that to happen because it's just going to disqualify you and actually being able to get a loan. But after 08, 09, it was very difficult. Very, very difficult. If you have friends that bought at that time, ask them how difficult it was to get a loan. It wasn't as easy as it was back then, and it's a little bit easier now, but it's still a very stringent process. You need to really have your stuff in order to get approved for a loan. So that's a good point too, that it's not simple, right? It's not like we're giving loans to anybody. You have to have the credit, you have to have the income, most importantly the debt to income ratio to show it, and you also have to have some sort of down payment, especially right now. Closing costs on average are much higher than they were during the pandemic, which is normal in a rising rate environment. And on top of the closing costs being a little bit higher, you're also looking at overappraised value too. So you have to have some sort of funds to be able to help you kind of get into that home.
Yeah, and I mean, ultimately, if you're watching this and you're thinking, okay, this all sounds like a lot, this could be a little overwhelming considering the chaotic market as it is. But something that you should probably do is sit down and look at your own finances to say, where do I fall? Because you need to have a starting point. You can't just wait until you decide next month or 6 months from now, hey, you know what, I need to buy a house now because rent is so high or whatever. You don't want to be in that position. You want to be looking at your finances now to say, hey, what do I need to do? So if somebody was watching and they're like, hey, where do I start? Where do they start as far as finances?
Definitely get pre-approved with a good loan officer specifically. I don't say just get approved anywhere, and the reason being is because you're not going to get the answer that you're looking for, especially if you know that you're not ready right away. I tell clients all the time that they may get referred because I tell my realtors, if they're interested, just let us have a conversation with them, because if they're not ready, we're going to put them on a plan to be ready, right? And that's the most important thing. Us as human beings, naturally, we procrastinate so much to the end. The problem is if you come to me and you try to start looking for a home 2 months before your lease is up, even if I get you a pre-approval in a day, you have to already take away 1 month in terms of underwriting and getting your loan closed. So that 1 month is gone. That means you have 1 month to search for a house. Kiah, is it realistic to search for a house in 1 month?
That would be no.
Exactly.
No.
So you have to think ahead. You have to plan ahead, right? So 3 to 6 months is usually where I tell people, let's get together, especially if you know you have a long time before you're actually going to get that going. So 6 months, we pull your credit, we look at your whole credit profile, and we're going to say this is where you need to be in order to be ready, 3 months ahead of time, because you still want to give yourself room to be able to search and stuff like that. So you need to start with a good loan officer. It doesn't necessarily have to be me. It could be someone that your realtor refers, but it has to be somebody that's going to sit down with you and say, hey, this is the plan. This is what you need to do moving forward. And that's important for you, especially as a first-time home buyer. You're the biggest investment that you're going to make. So make sure that you make it with the right people.
Absolutely. I back that 100%. I have clients that come to me a lot. I mean, we were just talking about it. I have a client that came to me with an approval from an online approval. No, but an online approval. And, you just don't know. If you can't pick up the phone and know who that person is or have a conversation, you may not want to move forward with that because, like we said, you want somebody that is credible, that knows what they're doing, that can give you a plan of action, because waiting until the last minute, you will be out of gas. And unfortunately, that's just kind of how the cookie crumbles.
Yeah, and so once you get to the realtor that you're going to talk to, or once you get to the loan officer that you're going to talk to, the documents that they're going to need is, of course, going to be a driver's license, your social security card, or a copy of your social security, your last 2 months of bank statements, your last 2 pay stubs, your last 2 years W-2s, and your last 2 years tax returns. Those are typically the normal documents that are asked for you to be able to fully run that application and give you a solid answer as to where you need to be, in terms of what your credit, income, and assets look like. So it's going to be very important to get that stuff together. We can kind of go a little bit more in depth on the pre-approval process and how that looks like, probably in another video as well.
Yeah, for sure, definitely. And then, of course, you need a realtor that you can trust, someone that comes with a team, someone who is available to you, because right now there's a lot of realtors that have come out of the woodworks, and they're taking on a lot of clients, but how much time do they really have to give to what you're looking for, and most importantly, put you in a position where you're with other resources, such as a loan officer, such as inspections, and those different aspects of the process. So you want to make sure that you are getting connected with the right people, and not just anyone that tells you that they have a license, because that's not the way to go.
Before we end this, I want to hit on that point too, because a lot of people say, oh no, don't worry, I'm going to go with my sister, don't worry, I'm going to go with my cousin, or my friend's brother, sister has a realtor license, and I'm just going to go with them because they're going to help me, they're going to give me $500 or $1,000 for closing, or whatever the case is. And I know that if they do not do this full time and they don't understand the market, you will not be guided in the right direction, unfortunately. You just won't. You need somebody that's doing this consistently. Being a realtor is probably the most underappreciated profession in real estate specifically, because they do need to understand the market that they're in. They need to understand the connections that they need to make with these listing agents, how to talk to people, how to put your offers to make sure that they're presentable. There's a lot of things that kind of come behind it. It's not just setting up a listing appointment, showing you the house, and writing up the offer. That's the easy part, right? It's about building that connection with the listing agent, with the sellers, making sure that you're top of mind, that you're front of mind, what that follow-up looks like, managing the process from beginning to end, having the right team, right? Because if you have a realtor that's part-time and they got a loan officer there that they met at some event that they went to that they have no idea who they work with, and then there's a title company that they essentially don't have any idea how they work as well, it's going to be a tragic first home for you, or if it's going to be your second home or third home, it's just going to be a bad experience. So go with people that are good, that are presentable, and when you're looking at buying a home, that you can interview the realtors, you can interview the loan officers, the lenders that you're going to be going with. You don't have to pick the first one that you meet. That's probably one of the biggest takeaways that I can give somebody that's going to be a first-time home buyer. Is you can vet the people that you're really going to be working with, and find the people that you're comfortable with moving forward.
Absolutely. I had someone vet me for a listing. I mean, and that's okay. You should do that. And as a realtor, I appreciated that, because when they chose me, I knew that they chose me because I came with the facts. I showed them exactly what I could do, and I came with proof. So yeah, you definitely vet the people out that you're going to choose, because this is a big deal. It's a lot of money, and it's your biggest investment.
100%. Yeah. Thank you guys so much. This was pretty much our first podcast, our first video together. I definitely want to do more. This is actually really fun.
Yeah,
I enjoyed it.
Yeah.
Awesome. Thank you guys.